Hi everyone, and welcome back to the My SG Prop podcast. It is 8 December 2025, and we're here with your weekly update, diving into the latest market pulse, trends, statistics, research, and studies. I'm Rainey, your host, and with me today, as always, is the insightful CS.
Thanks, Rainey. Great to be back. We've got quite a bit to unpack this week, especially with some interesting shifts in the private and public housing sectors.
Absolutely. Let's jump right into the hot news of the week. CS, I saw this headline. Private housing land supply is expected to fall further in the first half of 2026. What's your take on this?
Well, Rainey, it's a trend we've been observing for a while now, isn't it? A shrinking land supply usually means a few things for the market. Developers will have fewer sites to bid on, which could, in turn, drive up land costs. And ultimately, that usually translates to higher launch prices for new private homes down the road. It adds a layer of scarcity, which can certainly influence buyers' decisions.
That makes sense. Less supply, higher demand, higher prices. It's basic economics, but always important to remember in property. So, for those looking at future private launches, it might be a heads up to keep an eye on what's available now.
Precisely. And speaking of development, another big piece of news is how the Jurong Lake District master site is going to be split into parcels for sale. This is a massive project, and breaking it down into smaller, more manageable chunks could attract a wider range of developers, each bringing their own vision to different parts of the district. It's certainly a strategic move to accelerate its transformation into Singapore's second central business district.
Oh, that's exciting. Jurong Lake District has been on everyone's radar for so long. Splitting it up sounds like a smart way to get things moving faster. I can already picture the buzz and growth there. Now, let's pivot a bit to the HDB market. The November resale HDB volume rebounded with a 24% increase compared to October, and prices inched up 0.2% month-on-month. That's quite a jump in volume, right?
It is, Rainey, and it's a significant indicator. After what might have been a quieter October, a 24% rebound in volume suggests renewed buyer confidence, or perhaps some pent-up demand being released. The slight price increase, though minimal at 0.2%, reinforces that the HDB resale market remains resilient. For HDB owners looking to upgrade or first-time buyers, it shows a stable, albeit slowly appreciating, market. It's not a runaway train, but steady growth.
Steady growth is always good news. It gives people a bit more certainty. Now, let's switch gears to new launch promotions, because there are some interesting ones this week. Coastal Cabana EC caught my eye, especially with the sea views and being opposite downtown East. And no second-timer quota? That's pretty unique, isn't it?
It is indeed, Rainey. The no second-timer quota is a huge draw for this executive condominium. It levels the playing field, giving everyone an equal chance, which is quite rare for an EC. Starting from $1.43 million for a 3-bedroom and $1.62 million for a 4-bedroom, with the applications open until 21st December, it presents a compelling option, especially with those sea views and the convenience of downtown East nearby.
Wow, so for those who missed out on previous ECs, this could be their golden ticket. What about something for the foodies and investors? Gourmet Exchange Food Hub by CapitaLand.
Gourmet Exchange. This isn't residential, but it's an interesting commercial play. Developed by CapitaLand, its appeal lies in its connectivity. Walking distance to 2 MRT stations and just a 10-minute drive to the central business district. For F&B operators or investors looking for a well-located commercial asset with strong foot traffic potential, it's definitely something to consider.
Location, 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 even for food hubs, right? And what about those who prefer something completed, ready to move into? Skies Miltonia has some options.
Yes, Skies Miltonia offers immediate occupation. They have a 3-bedroom penthouse available for $2.8 million, and townhouses from $3.55 million or $760 per square foot. The additional incentive of a $200,000 furniture voucher makes it quite attractive for those who appreciate instant gratification and a ready-to-furnish home. It's perfect for buyers who don't want to wait for construction.
That furniture voucher is a sweet deal, almost like a housewarming gift from the developer. Now, for the resale market, we have a specific HDB listing. Tell us about the 898B Woodlands Drive 50 HDB unit.
This is a spacious HDB, Rainey, priced at $650,000. It's a 3-bedroom, 2-bath unit with a study, spanning 1,270 square feet. It's on a high floor with a park view, which is always a plus for natural light and tranquility. And its location, just a 5-minute walk to 888 Plaza, means convenience for daily amenities and food. It's a solid option for families looking for space and accessibility in the Woodlands area.
A great family home indeed. And for those with an eye on investments beyond Singapore, you've got a London option for us?
We do. For our listeners interested in overseas investments, there are London shops available with existing tenants, including big names like Starbucks. These properties are offering existing rental yields between 4% to 5.5%. Commercial properties with established tenants like Starbucks in a global city like London can be a stable income-generating asset for an investor looking for diversification.
4 to 5.5% yield with a tenant like Starbucks. That's certainly something to chew on for diversification. Well, that's all the market updates we have for you today from MySG Prop. I hope you picked up something useful for your next property move, whether it's local or overseas.
Absolutely. Don't forget to follow or share this episode with someone who's into real estate too. More insights and new launch updates await you at mysgprop.com.
Catch you next time, everyone.
See you.